TheTraderGuy.com Technical Analysis.
Hi, this is Chris from The Trader Guy, taking a look at trading systems. The one that I'm going to talk about now is the moving average crossover system. It's probably one of the oldest systems out there. It's very basic. It gets mixed reviews, but if used properly, can make you quite a bit of money over the longer term. I think one of the reasons, and I will say this up front, that it gets mixed reviews is because people try to use it on shorter time frames, and it's just not built for that. It's a trend following system. A trend on a 15-minute chart is nothing compared to a trend on a daily or a weekly chart. So what happens is people go in, they want to, trade often, and they get the signals, and it doesn't do so well because it truly needs a trend. So you have to recognize the use of the system. Over the longer term, the moving average crossover system does make money. It's been proven for decades. It just comes down to how intelligently you apply it. You'll notice that I have this chart zoomed out, and that's because price action doesn't have a whole lot to do with the moving average crossover system. It literally comes down to two lines, and in fact, if you could basically just wipe out this and just plot the moving averages, because that's really all you're paying attention to. So we need moving averages, as the name suggests. The 100-day exponential is the blue on the chart now. So that'll be our slow moving average, and you need two, and I'll show you why here in a second. The quicker one will be red, and it will be 50. Okay. So the idea is that the short-term momentum, the red line, crosses over the blue, and you're supposed to follow it in that direction, with the caveat that there is some type of slope to the lines. The more the slope, the more interesting the trade becomes to you. The reason there needs to be a slope is because it shows that there is momentum to the downside in this case. You can see that the red was on top and it went below, and that shows that the sellers over the last 50 days have been very aggressive. Yes, the first thing I can hear coming out of your thought process over there is, yes, you did move quite a bit before you got this signal. But if you bear with me, you'll see how that doesn't really matter. The reality is you tend to catch about 80% of the move, and that's more than enough to make quite a bit of money. Keep in mind that you have to cross over to get a signal. If you cross below, it's a sell signal. If you cross above, it's a buy signal. Let me show you how this system had performed recently. Now this is dollar Canada, and you can see that the 50 crossed above the 100 right here at roughly, I'm going to eyeball it and say about 107. It did not cross here. It bounced off of it. It went up, and then it crossed over here, and that's when you would have gotten out about 136 or so. So you're talking like 2,900 pips. That's a huge move over the course of about a year and a half. Now, as I said, it's a trend following system. So one of the problems, and this is part of where it gets a little bit of a bad rap, is this can and will happen. So you can see that the red line crossed the blue line here. That's a sell signal, and then crossed again shortly later. That would have been a gain, a very small gain, and you would have missed out on a couple hundred pips. That's kind of the cost of doing business with this particular system. However, you gained maybe 20 pips, 30 pips or something like that, and then you picked up 2,900. So really nothing to complain about. Quite often it'll do this and then it won't cross until you've lost a little bit of money, and that's really where the trouble comes in for most traders. But if you recognize that over the longer term this does in fact work, you can certainly make quite a bit of money doing it. You can see that we crossed below here, and we crossed back over here. So yes, you gave up quite a bit of the gains in that particular case, but when you crossed back over, it was a buy signal. So you went this direction, and you still were in the market here, and you really didn't get out until that next whip around. So that's a pretty sizable um, move. Let me go ahead and put the auto scroll back on and zoom in a bit. Okay, so you can see that there was a miss, and you did give up several hundred pips in the end, but still, when you're talking a 2900 pip move and you gave up all of that, honestly, that's how it makes its money. You just sit in the market forever. And since that crossover, you've probably gained back most of that too. Now, it's not always going to work that way. So, another chart that I can pull up just off the top of my head is um, Euro Kiwi, which has been fairly sideways. So, if you click on a moving average there, this is what you're going to get. I'll go ahead and use the same exact two moving averages. And you get flat. You get little micro crossovers here and there, and that's where you can get chopped up. This is also why you need to see some type of slope. That was a slope. That certainly was a slope. When you get this sideways and they start to tighten, get close together, that's a good sign that you need to just ignore this system. A good trader knows that systems work in different environments. Different systems have different strengths and weaknesses. This is an excellent chart here for like a stochastics crossover system, which is completely different. It is built for range bound trading. At this point, you would have to completely ignore this, but there are, again, plenty of other systems that you can use in this environment. Moving average crossover systems, again, are typically better for longer term trades. It keeps you in the market. You're either in or out most of the time if there's a slope. When you cross over, you not only get out of the market, but you can turn right back around, as we had seen recently here. You could have been long that whole time, and now you're short. So it's nice because it gives you plenty of clarity on the longer term trend. But again, the slope has to be with you. You want to see things upturning or downturning. Sideways tight lines like we had seen here are the absolute death knell of that system, and it's time to step away.